Welcome to our results presentation for 31st May 2024. To my left is, or your right, is Sandy Adam, Chairman and Founder of Springfield Properties.
Good morning.
Iain Logan, CFO.
Morning.
And myself, CEO. Okay, this time last year we were here and we were probably at a low point in the housing cycle. We were upfront about it. We had just come back from summer holidays and 3 weeks of sales hadn't kind of picked up. So we came to the market and we realised at that point we needed to change our plans. So we set a new ambitious plan with some challenging decisions and tasks to undertake. So we decided we were going to sell land, we were going to stop speculative build, and we were going to focus on getting debt down. And I'm pleased to announce today that we've exceeded our targets as we set out for the year. So the number one target we set to the market was to get our bank debt down, and we set a target of 55 million and we were able to get the bank debt down to 39 million, and we will explain how we got to that point where we're 15 million ahead of our target. Our trading results are ahead of expectations, and we've kind of followed the rest of the market with our results. One of the ways we managed to realise value was from our long, high-quality land bank, and we set ourselves a target to set 25 million to sell 25 million pounds, and we actually secured profitable land sales of 28 million, all above book values. One of those deals was a transformational agreement signed with Barratt Developments for Julies Hill Village, and we'll explain a bit more about that through the presentation. It still leaves us with a large open land bank of 5,500 plots, 90% of which has planning permission, and we have a strategic land bank of some 31,500 plots. We have significant land holdings in the north of Scotland, which is set to benefit from significant investment in the infrastructure and electricity network from the UK. Decisive action was taken through the year to reduce costs and to manage working capital across the business, and Iain will give a bit more detail on that. Good news, we have seen an improvement in private housing since year end. It's now 2 years since Liz Truss did our famous mini budget, and mortgage rates went up, and we've now 2 years passed from there. This summer holidays we actually saw probably a 20% increase in our reservations compared with the same period last year, so the signs are pretty positive on that front. Affordable housing contracts, we set ourselves a target to go back into affordable after closing it due to dissatisfaction with inflation, build cost inflation, and the prices we were getting. So both of those things turned in our favour, and we were able to sign up 50 million of contracts during the year. All of these actions and all of these results that we got gave us the confidence to go back to declaring a dividend and give a return to our investors. Iain.
Thanks, Ernest. Before we go into some of the detail, as Ernest said, I'm pleased to report that we've exceeded both our key targets for the year, which was a profit before tax and exceptionals of 10.6 million against the market expectation of 10 million. And importantly, again, as Ernest said, we've ended the year with net bank debt of 39.9 million versus our stated target at this time last year of 55 million. Going into some of the detail on the table, revenue was 267 million versus 332. The main reduction was in private housing. Again, this follows the trend of other house builders. That revenue reduction was offset by the land sales that Ernest mentioned of 28 million pounds. Those were a real positive for the group, and that they demonstrated the ability to monetize surplus land bank quickly. So that was a really good result for us. Gross margin improved from 14.4% to 16.3%, with improvements in affordable housing margin and also the profitable land sales. Given the challenging market conditions, we've reduced our overheads from 28 million to 26.5 million. We flagged in H1 last financial year that we had created 4 million of annualised overhead savings. Some of that came through last year, and the remainder's coming through this year. We continue to keep a close eye on our overheads and make sure they're appropriate for the size of the business. Operating profit came in at 18 million against 20.7 million in the prior year. And if you go to the bottom of the presentation slide, net bank debt again 39.9 million versus the previous year level of 62 million. So that was something we're very pleased to land on. Next slide, Rach. On private housing, you can see our completions are down. Again, we've mentioned that that's in line with the wider sector. Our average selling price increased from 293k to 316k, with increases across almost all of our brands. Most of that was due to housing mix, but as you'll see from a slide later on, pricing in Scotland is holding up very well at the moment. On affordable housing, again, our revenue was down, and that was a result of the actions we took a couple of years ago, where we had a planned pause on signing new contracts. However, with build cost inflation more stable, we've been signing new contracts, as we've announced, over the last 12 months, totaling over 50 million. And those are on terms that are more favourable for us in terms of shorter period contracts, where we can have more certainty on our cost and the ability to have predictability on our margins. Contract housing, again, the revenue was down. In the prior year, we had PRS income at Bertha Park, which we didn't have in the current year. And also Bertha Park had a planned pause in their new private phase until market conditions improved. They've now launched that private phase of housing, which is selling well. So as we go into 25, we'll expect to see those contract housing revenues increase again. Next slide, please, Rach. This slide evidences the positive action that was taken last September and the strategic approach to reduce our bank debt. So we've gone from 62 million to 39.9 million. The main inflows are the land sales that we've talked about of 25.6 million of cash and the operating profit of 19 million. We've also got a positive working capital inflow of 5.3 million, which again evidences our strategy of controlling the build spend on sites, and that's come through positively for us. In terms of outflows, the two main outflows were bank interest and tax payments of 8.5 million and 12 million deferred consideration payments. Next slide, Rach. Again, the balance sheet falls out really of the reduction in the net bank debt. So you can see what our assets look like. Our net assets at 158 million at the year end, again, is an important number for us. The one other point I would highlight on there is this time last year, we took out a term loan for 18 million pounds to give us extra comfort. We didn't really use that term loan at all, and we repaid it early in May, similar to what we did in the COVID times where we took out emergency funding, but it wasn't required.
So on the next slide, you see our land bank distribution. Land is the key to our business and it gives us control. It's a store of value that we can call on in tough times, which is what we've done this last year. And on the next slide, as we've said in the past, this year was a year for getting our debt down, and part of this involved selling some of our own land bank. So you can see on the table on the right-hand side that our number of plots has fallen. However, we still retain one of the largest land banks in Scotland, both in terms of numbers and in terms of years supply. On our own land, we've got a 6-year land supply, 5,500 plots. And if you add on to that our contracted land, we've got a further 8-year supply, 7,000 plots. And our strategic options are vast. All of our land sales this year have been above book value and don't affect near-term sales. Our land bank store of value that we've been able to call on through these last year of tough times has been invaluable. And with the market looking brighter again now, we can look at opening up more sites again next year.
Okay, earlier I mentioned that one of the large land deals we did was with a new village in Jury's Hill. Just the background here was we over 5-6 years, we managed to achieve planning permission for over 3,000 homes. And to the point to the end of last year, we had spent some 20 million pounds of work in progress buying land and getting it through planning. Now, to actually get it to the stage where we would be selling houses, we probably had another 25 to 30 million pounds worth of infrastructure that had to be put in. It's a big village, it needs a lot of infrastructure. So what we did was we got in discussions quite early on, and we were looking for a partner with a good reputation and preferably with deep pockets. So Barratt's actually met that criteria, and we got into discussion with them, and the agreement we had was that we would sell them enough land this financial year, to raise £10 million. So it would take our work in progress down from 20 to 10. And then we agreed that they would put in all the infrastructure and we would pay them for our half of that infrastructure using land that we already owned. So instead of us putting out 50 million over 2-3 years to get a house sale, now we've actually gained 10 million and we will get a house sale. We have a partner who we have a lot of faith in. They're a 5-star house builder. We've done deals with them in the past. They build a good product and they have the deep pockets that will be required to get the infrastructure in and going, and they've got experience of doing it. So it is a deal that de-risks this project completely for us, but also accelerates the sales. We will still retain 1,500 plots here, and they will have 1,500 plots as well. So there's 15-20 years supply, so plenty to keep us going for many years ahead. Okay, one of the things that is kind of became apparent over the last year is just what's happened to the if you like, the target to get net zero for 2050 for UK. Now, what had happened was a year ago, I went to a presentation in Inverness at Eden Court, and there was the 4 port chiefs, which was Mig, Ardeshir, Inverness and Cromarty, and it was Roy McGregor from Global, and there was guys from Aventus and Sinclair Brown and Joanne all stood up and gave presentations as to what Freeport status meant. So they've been awarded Freeport status, which basically gives them a favourable tax breaks and encourages development. And I went back to Sandy and said, these guys are talking about creating 8,000 to 10,000 jobs. We should really check out if this is real, if this is going to happen. So we went out to see Roy and Lewis, and Roy took us through just what Global Energy Group were doing, and they had Sumitomo working next door to them, building a 350 million cable factory. The cables are used to connect offshore to onshore, offshore wind. We then went to Ardeshir, and we saw 300 acres and 300 million that's being spent just to get it back to port. And then further investment will be coming so that there's manufacturing, assembly and laydown areas. And basically in that area, the estimate is something like £3 billion are going to be invested to assist the UK with its renewables. Now, about 2 months ago, the story took another twist when we basically rented an office downstairs in Elgin to Balfour Beatty, and they kind of came upstairs and said, we won a contract and we're going to be laying or upgrading the power lines between Beaulieu and Peterhead, and we're going to have 800 workforce coming up, and those 800 workforce are going to need accommodation, temporary, permanent, rented. Can you help us with that? And we said, yeah, sure, we can certainly look into that. And then another month, 6 weeks later, Bam Nuttall got in touch, another engineering company, and he got in touch and said, we're upgrading the Beaulieu to Peterhead line, and we're going to need, 800 employees coming up. We're going to need accommodation for these guys. And I kind of thought, okay, you've obviously got your wires crossed because we've had Balfour Beatty saying this, but they're saying, no, we're doing the substations. They're doing the pylons. They're upgrading the pylons to 400 kV. We're the substations where you switch the power down so it can get, be used for domestic use and the like. So then there's 1,600 houses. So we got in touch very quickly with SSE, Scottish Southern Electric Network, to find out what was the project. So to the right there on the map, you can see all of these yellow lines. And if you know the geography of Scotland, you've got Shetland Isles up there. That line represents, an offshore cable that's connecting the wind that's generated in Shetland and coming on to the north of Scotland, and it comes in at Spittal. Just to the left of that, you can see Orkney, then it's going to Inverness, and then it works its way down from Spittal to Beaulieu. Then from Beaulieu, it works its way, over to Stornoway, the Western Isles. You can see it go down to Drumnadrochit, making its way over to Skye, and then from Beaulieu to Peterhead, and then from Peterhead, it goes down to Dundee. From Dundee, it goes through Perth, goes through Stirling, And the reason I mention all those areas is those areas are exactly where we have villages, and the power lines basically follow roads. And we have sites from Bewley, Drumnadrochit, Inverness, Nairn, Forres, Elgin, Buckie, Keith, Aberlour, Turriff, and all the way through. So we spoke to SSE, and they're actually saying that there's also 2 hydro schemes that are getting put up north, which will be effectively be batteries for the power. And effectively, the situation is that Scotland currently generates something like 10 gigawatts of energy, and it usually is about 5, and it tries to ship the rest. But all of the power lines aren't enough to take it away. So there needs to be significant investment to upgrade those power lines. And the ambitions over the next 5 to 6 years, and it's kind of UK-led, UK initiative, is that they're adding another 15 to 20 gigawatts of power. And the amount that they'll be spending in the north of Scotland to upgrade all the networks is something like £22 billion. In the south of Scotland, it's something like £12 billion. So altogether, this is the same amount of investment as HS2 originally started at. So it's a massive investment, and it's going to need a lot of workforce to come. Now, in the Highlands, in the Murray Firth area, we currently have about 80,000 houses. Now, direct jobs being added here, whether it's 14,000 or 16,000, you can see the impact of 15 to 20%, accommodations can be required. And these are all new employees. It's not going to be displacement of jobs. This is going to be new jobs. So we have great land holdings in this area, and there are going to be fantastic opportunities here. So you will notice that we did not sell any land in the north, and this is exactly why. So we are in very close contact with SSE, with Balfour Beatty, with Ballinnuttall, with the Freeports. We are looking at what their needs are. We're speaking to SNIB, Scottish National Investment Bank. We're speaking to some private equity, and we are looking at ways of investing in the accommodation so that we can meet the market. There is clearly going to be a big boost to the economy here, and it's a very exciting prospect for us. Okay, on to the next slide. Private housing. We have seen, it's been 2 years since the mini budget, as I said. We've seen a Bank of England reduction. We saw ECB reduce last week. I think we're expecting US to reduce their rates. Probably not expecting Bank of England to reduce their rates, although inflation did stay at 2% today. But I think it's fair to say that there is slightly more optimism, and we are seeing certainly from footfall and from reservation rates a return of confidence amongst our buyers. It's been 2 years of a lull, and we do have a shortage of housing, and people do need to move, and people do need their families grow, and so we are seeing better footfall and better reservation rates. We did curtail any speculative pricing housing development for a period, but we are now starting new sites again, and we're reacting to what the market is telling us. Selling prices have held up. Scotland prices, we'll see through there, they increased by 2% in the year. We give about 1% or 2% incentives, so we've not really had to give too much away by way of trying to increase sales. We do have a new house type coming through for the group in 24-25, which will be an incredibly efficient house. And it will be right across the board for all of our brands. And it actually means that we'll have a, quality will have a greater chance to improve from its already high level. We will have consistent build approaches right throughout the business. And we're really excited about a new product that's coming to market. We're going to continue to offer the high level of spec that we offer with slightly extra space compared to some of our competitors. And, we hope to improve our 96%, which is up from 94 and 23 for customer satisfaction. And we did receive in-house gold awards for all of our brands last year. Affordable housing, as stated earlier on, we did recommence, and we managed to secure some 50 million of contracts there. We've seen a reduction in cost price inflation, which makes this more attractive. We're seeing lots of good news and lots of noise from England about 300,000 house target and affordable housing commitments by Labour government. At some point, those consequentials will work their way to Scotland. So we're quite pleased that there is a need, and the government appears focused on delivering affordable housing, and certainly we're seeing contracts getting signed. The fundamentals of the affordable housings are still strong. We did have 2 poor years, which we've referred to, historically. But we do believe now that we've got good margins going forward, good contracts, and we've got a good land bank to take, to make the most of this opportunity. Down the bottom there, you can see me with the housing minister. We do have a good relationship with the housing minister, and we do bend his ear whenever possible. Okay, the housing market in Scotland. We have an emergency in Scotland. My solution, build more houses. Fairly simple. As we know, though, many governments have tried to build more houses, and it proves quite a challenging task to achieve. Scottish Government remains committed to supporting housing. I think with Scottish Government, the changes that we've seen, we've got John Swinney, ex-Finance Minister, and Kate Forbes, Deputy as ex-Finance Minister. There is, in my view, a much more business oriented kind of view and experience amongst the leaders there. So we can hope to see better things for the economy. Certainly, we've been invited, I think it's us and another house builder, are on the housing task force to help solve this emergency. And we've got a foot in the door there, along with pension funds and PRS providers. So we are doing our best to try and influence and encourage government to do the right things. The rent caps that we've seen, there have been noises in the last 2 weeks from Kate Forbes that there's going to be exemptions for the PRS businesses on the rent caps so that they will be able to invest again in Scotland. And that can only get better than what it is just now, which is at zero. So that would be hopeful. Bank of England base rate reduction, obviously that leads to mortgage reductions. We're seeing mortgages about 1% lower than they were this time last year. I do believe that interest rates are going to continue to fall, and we're obviously well placed for that. Scotland, one of the important things that we always kind of come back to is Scotland is more affordable than the rest of the UK. We are at full employment, and we're currently 4 times salary to mortgage rates versus 6 for the UK as a whole. So we are more affordable. Okay then, ESG. Obviously we take ESG very seriously. All of our homes are built using MMC, which is modern methods of construction. We make the panels and we assemble them on site. We find this a very efficient way to build a house. We use air source heat pumps, ground source heat pumps. 22% of our site workers are currently undertaking apprentices. We recognise we have a responsibility to train, and it's something that's very good for our business if we're training our own people. We have electrification of our fleet, and obviously we follow all of the governance as required. Sandy.
So to sum up, as you've heard, we've delivered on our objectives for the last year. We've put the company back into a strong strategic position. We're seeing recovery in both private and affordable markets. We retain a large land bank in strategic positions. Our strategic alliance with Barratt at Jury's Hill is an excellent deal for us. We see a huge opportunity coming in the north of Scotland, where we have a dominant market position. We're on track to achieve a strong increase in profits for this next year. And the current situation, our confidence in the future, and the increasing opportunities available to us have given us the confidence to restore a dividend.
Okay, so we would just like to thank all of you who have invested or encourage you that are thinking of investing, and we'll open up now to questions. Rachel.
Let's start with private housing. Are you seeing a pickup demand across all regions in Scotland or any specific areas?
We've seen a general upturn across most regions. The biggest upturn has been in the Central Belt, which probably had the biggest downturn. So where the North held up quite strong throughout the last 2 years, certainly in the Murray area and Highland area, we kind of held our sales position. We didn't open new sites because we weren't doing speculative stuff, so that affects the sales rates. But in Central Belt, we did see a downturn, but we've certainly seen recent weeks and since June the 1st and since the August decision on rates, we have seen an upturn in Central Belt. That's certainly the feedback I get from our colleagues across Scotland as well.
Great, thank you. And staying with private, would you say that private reservation rates are nearly back to normal, or is there still more recovery potential to come through?
Normal, what is normal? We had, I mean, normal, the last normal year is probably 2018, 2019. And I think we're still a bit behind that. I think Scotland wide, we're probably at 0.5 reservations a week. This is as an industry, and we were certainly higher than that in those years. But then when you follow on from that, you had the COVID year, and then you had the frenzy after COVID, and then you've got the Liz Truss, where you've got the big downturn. So no, I think we would, we'd certainly welcome a further increase in sales rates. But we're at a level where we're above our targets, and as our targets are out there and projections. And if we're doing better than that at this current point in time, then we've got the overheads. We've adjusted those to make sure they fit with our sales now. So any increase in our sales, we think we've got some capacity for improvement from where we are. So it could be better, of course it could, but it's nowhere near the kind of frenzied years of 21, 22.
Right, thank you. And going forward, do you expect your mix of private and affordable to stay roughly where it is at the moment, or do you think there's more growth potential on one side of the business than the other?
I think we're probably with affordable. I think there is scope for that to increase over the next 2 years. Probably the issue there we have is we've got a change in government probably happening in 26, so budgets will get a bit confused. So we've certainly got the land, we've certainly got the the holding there. What I would expect to see with the work coming in the north is an avenue of potentially PRS that we don't currently have. I think there is an opportunity to build housing that will be able to accommodate the workers that are coming up. We don't know exactly what form that will take, but we're certainly looking at that, and that's something not in our figures at this point in time. And I do see a great opportunity there, because those jobs, I mean, the electrification and the upgrading of the network, as Scotland goes to try and get to 50 gigawatts, which is a target by 2050, which would then effectively supply the whole of UK. Scotland currently uses about 5 gigawatts, and England, I'm guessing, would be 45, 10 times the size of Scotland. Then the kind of national security aspect to that, and us becoming self-sufficient is really important. So the other important thing about that is that almost becomes a non-cyclical business up north, because those jobs and the investment in the Freeport, it's not really depending on what the economy is doing, because it's government money that's going to be coming in. So that's something that we really are excited about, and we see a great potential.
Right, thank you. And something we often hear house builders talking about, and that's planning. How is there planning reform coming through? What's the outlook like?
Yes, we keep getting more and more regulations to ease the planning and to speed it up. And Sandy's older than me, but we've never seen any regulations that speed it up. But the important thing is, while we smile and we joke about it, the kind of things to just point out is we've got 5,500 of our plots that we fully own, and 90% of planning. We have a further few thousand that have planning that are contracted. So any changes to planning and any slowing up of planning, in a way, our land bank that we have is a positive, because we already have that asset, and that's our, Sandy says, we can unlock value from that. The potential for a capital gains tax increase to 40% is not going to lead to lots of farmers selling the land post-October or post-November. So we already have land. So we think we're in a very strong position for whatever hurdles are put in the way. And while it's not what we would want long-term, clearly short-term, we're well placed to meet those challenges where people with smaller land blanks without planning are not in that position. So rather than just I criticize the planning system and say that it's a huge negative, there is a positive in what we've done by banking land to this point.
Great. That was one of the follow-on questions about the impending budget, and do you foresee any potential changes that could impact you? And I guess you've mentioned capital gains tax. Anything else?
Yeah, I stopped second guessing government a long time ago. You've seen me have a chat about government, what I think, Rachel, and it's not really for public consumption.
Probably not. Should we move swiftly on from that?
Yes.
Unsurprisingly, there's a lot of questions coming about the north of Scotland. So what does the competition in the north of Scotland look like with respect to other house builders?
I mean, there are other house builders, but it's all about land and planning and being able to react quickly. The upgrade, the initial upgrade, there's Peterhead to Bewley to, and all of those lines that you see there in substations. One of these substations, for example, one at Bewley, it's 1 kilometre by 400 metres. So the substation, that's the size of it, and its peak in 28 is going to have 597 employees on it. So that's just an example of the kind of bodies that are coming up there. But it is happening, and it's starting in 26. And there is people are going to have to stay somewhere. There's actually restrictions. SSE are very aware that, you know, if they're having an impact on the communities, they want it to be a positive one. So they are very clear. There isn't the hotel rooms. There isn't the, you know, there isn't the rental market for the influx that's coming. So they're very aware that, you know, we're going to have to seek innovative solutions. Highland Council and Murray Council have been very positive and proactive as well. So I can see a very, you know, very positive. Everyone, the key players are working together, trying to find solutions with regular meetings. And I can only see that as positive. The other house builders, they may want to get in there, but you need land, and you need land with planning, and you need deals with landowners. And we have all of those things in place. So I think we're not the only people, and there's enough to share and there's enough to go around, and we're going to need, you know, everyone to be doing things here. That it's such a massive impact that there's enough for everyone, but we're very well positioned for it.
Right, and specifically with regard to Springfield, have you got the required management structure in place in the north of Scotland, and have you got the capacity, or will you need to invest more?
No, I mean, we're going to have to grow. I mean, if we're increasing output, then we're going to need more people. We do have the 2 most established house builders in the region. Tullocks are almost 100 years old and have been building a #1 builder in the Highlands for many, many years. Springfield, obviously, and Murray, we've been there for as long as Sandy's been going. So yes, I certainly believe in our management. So yes, we know the area, and I genuinely would claim we know that area as well, if not better than anyone. So we know we have great relations with the councils, great relations with the supply chain. So yes, I think we're very well equipped to deal with any upsurge.
There's certainly a boom time coming for the Highlands and the Murray area, and it's going to bring challenges as well as opportunities, but we've just got to manage them as best we can. But it's better to have that challenges and opportunities than no opportunities. So just, you know, we're certainly very well placed to take advantage of them.
Fantastic. And would you consider any further land sales in general and specifically in the north of Scotland?
No. We set a target for getting our debt down, and every time we sell a bit of land, we sold surplus land that wasn't in a sort of 2-3 year plan, but every time we sell land, we're losing 20% margin that we would have made ourselves. Now, there is our debt. We set a target of 55 and then down to 40 the year after. We've actually got our debt down to where we want it to be a year from now. So we've got that to where we needed. We pressed that lever. We made profitable land sales. Each one was above book value. We've demonstrated, you know, as well to the market what our value of our land bank could be and what the value of the business could be. So yeah, I don't think there's a need to do it. But like anything, if things change and we need to use that lever again, then we still have that lever. But certainly selling land to someone else doesn't make any sense in the north at this point in time.
Absolutely. And
you know, you would do the comparison of what's the interest on a debt compared to the return you can make from that land, and it's very much in favour of the return we can make on the land.
Absolutely. And it sounds like you've got plenty to go at, but you know, as ever, we've had the question, any further M&A activity, do you think, or is that on hold for the moment?
Well, in this year, unfortunately, the M&A that's coming, or the opportunities that are coming, are small, medium-sized house builders that are, you know, really struggling. Stuart Milne being the obvious one, and we looked at their sites. It wasn't for us, but we will always look at opportunities, and if opportunities come along and they represent value, and we think they'll offer a good return to shareholders, then we will look at them. You know, I see Cala were acquired today, and private equities, you know, acquired Cala for 1.35 today. So there's clearly a lot of that kind of activity going on in the market just now. But sadly, we're seeing the small and medium-sized household is really struggling just now. But you know, I don't want to be if opportunities come along and we can see value somewhere, then obviously we would look at it. Buying land is what we do.
Thank you. And let's have a look. We've got some wider questions. Does Westminster's housing policy have much direct influence on Scottish house building prospects?
I think it will do if Labour get in charge in Scotland in 2 years' time. I think devolution could be argued it works really well if you've got the same party in power in Scotland as is in charge at Westminster, because then there's no one to blame. They're all one thing. So you would think if the policy of Labour at Westminster is one thing, then you would think Scotland would follow. For the 2-year interim period, I can't see the SNP doing anything Labour do, because that would then make what's the point in an SNP if they're just doing exactly the same as Labour. So again, it's very difficult to guess these things, but Scotland's housing is devolved in Scotland, and they make their own decisions. And certainly Paul McLennan, the housing minister, he's a lot more proactive and engaging with the housing and Homes for Scotland and house builders. And like I say, John Swinney and Kate Ford have made very significant noises about housing, as Rachel Reeves has made in England. So yeah, I do think housing is right up on the priority. But clearly, the two things that go with that are, health and education as well, and the infrastructure. Through house building, we can pay for education and schooling, and we help improve infrastructure as an industry. We help improve the fabric of society, shall we say? So, it's important to invest in housing. There's so many good social aspects come with it.
One of the things that does happen if Labour spent a lot more on affordable housing in England is a consequential fee through to Scotland. And in the past, that money has been ring-fenced for housing, but there's no guarantee that will continue to happen. But obviously, we hope it does.
Okay, thank you. And just a question on the PRS market. How quickly do you envisage that could return?
And there's a housing bill that's going through, and until that housing bill is approved, there is uncertainty. And as long as that uncertainty is there, I don't see PRS coming through. So it's 6 months to a year, but the longer it takes, the more pent-up demand there is. It's not, I think we know this in England as well, the private landlord, with additional dwelling supplement, we have in Scotland 6%, with the mortgage interest relief no longer allowed. It's, there's not a lot of people investing. We used to have 8% of our sales used to be to the investment market. It's down 1-2% maybe even less than that now. So any changes to PRS, and remember, we've got next to none in Scotland. We did one of Sigma's I think they only did 2 schemes in Scotland. We know how many they've done in England. And if you speak to Sigma, that they're a Scottish-based company, and they've only got 2 sites in Scotland. It's, Graham, I know Graham would love to do more in Scotland, as would Castlemoda, as would Legal and General, as would the rest of them. So the ball really is in government's court, and the sooner the housing bill gets through, the better.
Right. Well, thank you very much for answering those questions. That concludes the presentation for this time round. Thank you very much for your time, gentlemen, and we look forward to hearing from you again next year. And I hope everyone can join us for the webinar in February 2025.
Yeah, thanks for your support, everyone.